You can go ahead.
Okay. Hello, everyone. Thank you for joining the fourth session of our training. In the previous two sessions, we talked about Wolfpack, general ledger, chart of accounts, some technical parts. Then we talked about accounts payable, vendors, how to extract those reports. After that, we talked about your owners, your revenue cycle, billing cycle, division of interest, and how to extract those reports out of Wolfpack. And now in this fourth segment, we are going to talk about the AFEs. So the AFE part is, it is not very much
I wasn't aware that they held two earlier parts because
the first three parts. Oh, that's fine. That was mainly for Amadella and Ianu. Hello. Okay.
yeah, I was saying that I didn't know when you guys held the earlier two parts.
Yeah, I'm saying that it's fine. Those were for Ianu and Hamadella. So that's why we
Okay.
invited you directly to the AFE part. And so in this AFE part, it will be less on Wolfpack, on what is required to do in Wolfpack, and it will be more on what is an AFE, what does it mean, what is the process of sending out an AFE, what is the difference between an AFE and a cash call, and how to decide different things. It will be more on process based and theoretically based on landbank concepts. And then after we learn that, we will learn how to extract reports from Wolfpack for AFE. So we don't, in this part, we are not going to learn how to set up an AFE in Wolfpack, but we will learn on how to extract the reports, because setting up an AFE in Wolfpack is what Ed's team does, and we're going to leave that with him. Okay. So to begin with, does anyone know what an AFE means?
Authority for expenditure.
Okay. And do you know when we send that out?
When you have like a new build project that you need to send, so you could charge the working interest owners.
Okay. So yes, Samuel said that very correctly. And for Urvisha, Bhavesh, Anu, and Hamdela, like we saw in the first session, whenever we talk about a well or a field, we see that there's a downhole part below the ground and there's a part on the surface. You have some equipment on the surface as well, like your separators, dehydrators, compressors, pipelines, your wellhead, all those things. And similar to that, there are a lot of tools and devices that you have below the ground. You have your casing, your tubing, your pumps, and a lot of other tools, which varies from well to well. So whenever we do a big project, it requires a lot of money. And since we are not the only working interest owner in those wells, we asked other working interest owners to pay their share. Now you will ask me, what is the difference between AFE and a joint interest billing? In joint interest billing also, we are asking the other owners to pay their share of the total expenses. Then why can't we do that for AFE also? The reason is that for your joint interest billing, you're billing out your regular operating expenditures, which are not that much, $5,000, $10,000. Um, and like it's like, okay, I will pay all the bills right now, and later all of us can settle. You guys can pay me your share. That's what we do in joint interest billing. But in AFEs, your total amount is actually higher. You're spending $40,000, $50,000, $60,000, and so on. And then I will come in and say, since I'm the operator, I will say, hey, $50,000 is a lot of money. I don't have that kind of cash lying around to pay everyone's bills, and then you guys pay me later. So let's do this thing. The total project estimate is $50,000. So you guys pay me your share in advance. And once I get money from all of you, then I will put that money and go ahead and do the project. So that is what an AFE is. Now, there are two, um, like all these relationships between operators and other working interest owners, they are operated by joint operating agreements or the JOAs. And a JOA says that when you are actually doing anything downhole, and if you're spending some money greater than a particular amount, and that amount can vary from location to location. Um, let's say if you spend more than $10,000, $10,000 is a very outdated JOA, something from the 80s or the 90s. But let's say it says something, if you spend more than $20,000 on this well, you need everyone's permission. But for any expenses up to $20,000, you don't need our permission. You can go ahead and do whatever you want and just send us our bill. Now for downhole, but for surface projects, most of the joint operating agreements say that you don't need to get our permission, just go ahead and do it. Because surface projects are not as expensive as the downhole projects. So whenever we do anything on the surface, instead of sending out an AFE, we send out a cash call. You might have heard that during the team meetings. So if we are doing anything on the surface of our property, of our location, then we will send out a cash call. If we are doing anything below the ground, then we will send out an AFE. Now, a major difference between AFE and cash call is they're basically more or less the same. There's a project, we put together an estimate that this is how much it's going to cost. And you send out a letter to all the owners and tell them, hey, just pay your share. We'll gather the money and go ahead and do the project. But the major difference between AFE and cash call is in an AFE, you send out another document in which you ask for permission, you ask for consent from other working interest owners. And you say that, hey, this is the project that I'm planning to do. This is how much it's going to cost. Do you give your consent to do this project? And if you give your consent, then you please pay your share of the expenses. Whereas in a cash call, you are not asking for the consent. You're just saying that, hey, I'm going to go do it, pay your share. Now, now when you send out an AFE and you send out that consent document, the owners usually get 30 days time to reply back to you. And if they don't reply back to you within 30 days, you will assume that this particular owner has said no, or this particular owner has gone non-consent on this well, or non-consent on this particular project. Now, let's say if majority of the owners say no, majority of the owners go non-consent, then basically you can't do the project because no one wants to do it. But let's say there are 5 owners in a project, in a well, and 4 of them said yes, and 1 of them said no. So what will happen is, let's say that one person who said no, his share of the expenses was $10,000 and he owns 10% interest in the well. What we will do, the other 4 owners have the option to pay the $10,000 of the non-consenting party and take over their 10% share till they recover 4 times the cost, or till they recover um, the money that they paid on behalf of the non-consenting party. Does that make sense to everyone?
Sorry, can you come again?
Okay, sure. So let's say there are 5 owners in a property. You send out a AFE to all of them. 4 of them said yes, that we want to do the project. The fifth guy said, no, I don't want to do the project. Now, let's say all 5 of them own 20% working interest in the well. So the other 4 parties that went consent on the project will get an option to pay the share of the non-consenting party and take over the working interest of the non-consenting party. So let's say it's the 5 of us. Bhavesh said, I'm not going to pay. So I will say, okay, Bhavesh's share was $10,000. I will pay Bhavesh's share. So I'll pay my 10,000 plus I'll pay his 10,000. But in exchange for that, Bhavesh's working interest will now be mine for next 6 months or till I recover my $10,000 back from the revenue that will be generated after the project is completed. Make sense? Okay. Hamdella, you had a question?
I wanted you to like explain again. Like I didn't get
Okay.
that first.
So does it make sense now?
Yes, it was.
Okay. Now let's say, um, now let's say instead of replying non-consent or saying no to the project, Bhavesh is a lazy guy and he simply forgot to reply. He forgot to tell us whether he's participating or not, whether he's going consent or non-consent. Or maybe he saw the letter and he chose that, hey, I'm not going to reply. If I reply to these guys, they're gonna ask me for $10,000. So I'm just gonna pretend that I never received the mail. Or I received the mail, but I'll just gonna pretend that, hey, nah, I don't know what you guys are talking about, just to get out of it. So to avoid people from doing such things, the joint operating agreement has another condition. If Bhavesh does not reply within 30 days, we will issue 400 times the penalty on him. And his interest will be open for everyone else to take over by paying his interest. So in the previous case, he replied no. Now in this case, he did not reply at all. So now what will happen? Hamdela, Yanu, all of us can say that we will pay his $10,000, but his working interest becomes ours till I recover 4 times of what I paid on his behalf. So his share was $10,000, but I paid on his behalf. So I will recover $40,000 from the revenue that will come after the project. And once I recover $40,000, then I will say, okay, Bhavesh, here's your working interest back. You can keep it. So that is called penalty. And penalty is issued on the parties that do not um, respond to an AFE, or sometimes, let's say 5 of us are going non-consent, are going consent, and Bhavesh is saying going non-consent. So we're like, this particular guy is causing problems. Let's give him a penalty. Like there are different types of rules. This doesn't generally happen. I was just saying it to give you guys an example and have a better understanding. So now, do you guys understand the difference between an AFE and a cash call? When we send out an AFE, when we send out a cash call, and when what are the different uh, things within an AFE, like all parties going consent, some parties going non-consent, some parties choosing not to reply. Does that make sense to everyone?
Yes.
Samuel, does that make sense? Were you familiar with this part so far or no?
Yes, I'm familiar with that part. But what
Okay,
is a bit that means a no reply is almost the same thing as non-consent.
correct. If we don't get a reply within 30 days, we will assume that you're non-consent.
Okay, makes sense.
Yeah. So yeah, that's pretty much pretty much it on the concept of AFE. I wanted all of you to be familiar what does that mean and all those things that you will hear in the weekly team meetings. Now, what happens whenever we need to do an AFE? We put together a procedure of what the project is, what all the steps will be in the project, and we put together a price estimate that this is how much each thing is going to cost. And we prepare that AFE document and we send it to the EDS team. We send it to EDS team. EDS team sets it up in Wolfepak and generates a cash call document, a consent, non-consent document. And we also write a cover letter in which we explain what the project is. And in the cover letter, we include that if you don't respond within this much time, this is what the penalty will be and the entire process. And then we send it out to the owners. We wait for 30 days. And as we receive those, we send it via certified mail. So what is certified mail? Certified mail in United States is when the postman comes to your office, to your home to deliver the mail, you will have to sign a document that I have received it. And that signed, it's a green card. You will have to sign that green card that yes, I have received this document. And that green card goes back to the sender of the document. And then we receive those green cards back in the office. And that's when we know that this particular owner has um, received the AFE. Now, from the date that he received the AFE, from that date, we have that owner has 30 days to respond. Cool. Any questions so far? Okay, so we'll do one exercise. This meeting was recorded, and again, Bhavesh will help me upload it to YouTube and share it with everyone. So I want all of you that by our next week's Wednesday meeting, I want you guys to summarize this thing in an email and send it to me. Again, the things I want you to summarize, the difference between a cash call and an AFE, the different cases within an AFE, and that this whole green card thing. So summarize it in email and send it to me. That will be homework for you guys. Now, preparing that AFE document is what engineers do in almost all the companies. So I won't dive into that. But once the project is completed, then Bhavesh does his part. And now you see, Bhavesh, why is it so important for you to catch those AFE invoices when they come in and label them that this is an AFE invoice? Because the whole thing just got so much more complicated. What might be going to you as a bill might go to me now. What might go to revenue to you might go to now. It gets much more complicated. So that's why it's very important to, when an invoice comes in, to identify that, hey, this is an AFE invoice and mark it that this is an AFE invoice. Let's see if our Sonic wall works properly. I'll show you guys the AFE tracker. Okay, I have a sample on my computer. So this is the AFE tracker that we use. The first tab is the AFE summary tab, which lists out all the AFE numbers, the well name, date, description, total cost, the current status, whether it is completed, cancelled, or so on. Sometimes you will see under status, you will see we have a note here which says 100% working interest. That means we own 100% interest in this well, and obviously then we don't need anyone's permission to do anything. And similar to that, we have a cash call page where we list down all the cash calls. and their details. And then detail sheet is detail according to owner. So for, let's say, AFE number 81, these are all the owners that participated in it. The total cost was $20,000. So this is everyone's working interest in column J. So column G shows you how much each owner needs to pay. So out of the total $20,000, Trigen Exploration needed to pay $222. One Timothy needs to pay $384. Proline needs to pay $2,400. Your Chesapeake Energy, they need to pay $10,000. And this is why we do AFEs. The total project cost is $20,500, but our share, what we own, our share of the expense is only $2,400. $18,000 is what other companies need to pay us. So we are like, why should we put our $18,000 in and cause a cash crunch within our company? So we ask other owners, hey, pay in advance, pay your share, and that's when we will do the work. And then these are just some other things. Then your date mailed is when the mail was sent out. Date owner received is when the owner signed that green card and sent it back to us. Then penalty date will be 30 days after the date owner received. So if owner received the AFE on August 11th, and if he does not reply back by September 10th, then he will be penalized. Then did he participate? Yes or no? Did he pay? Yes or no? And his amount. And some other details here. On the AFE summary tab, you can also see what will be the penalties for different things. It will be 300%, 400%, and so on. And most of the AFEs give you 30 days time to reply, but some AFE will give you 60 days time to reply. Now that was the AFE tracker. Now, if I come back to the accounting part, what I need to check as an accountant mainly is how much cost did I plan it for, and how much cost did it actually end up happening. So let's go into Wolfepak, and in Wolfepak, we can open a report, and that report basically shows you a comparison between the planned cost and the actual cost. And that is what you call a post-capital project audit. That way we will know that, hey, every time we plan that we'll spend only $2,000 on contract labor. But looking at our data, it seems like every time we do an AFE, we end up spending $4,000. So that's an issue. This is just one example. It could be different scenarios. You can get so much insight out of it. And sometimes when you do an AFE, you also buy some new equipment for your location. And Hamidella is from accounting background, and so is Bhavesh. So you guys should know that if you buy a new equipment, you can add it as a tax deduction when you file your income tax. And you will also apply for its depreciation value each year. So that's why it's important to track your capital expenditures also. So again, I'll go to this drop down menu and I'll select revenue and billing this time. And why we are going under revenue billing? Because this is a billing to other working interest owners. Then I'll go to reports. And under reports section, you will see there's an option here called AFE. And here you can see an AFE comparison. Or you can also see a basic listing of each AFE. You can basically see a list of all the AFEs that we have ever done. And you also have an option to arrange by property number. So your primary identification will be property number, and it will show you all the AFEs that have been done for that property number. It arranged it in that manner. But I usually like to, like you see, for one, right to me one, AFE 57, then AFE 59. Another very good example would be your, like, let's see, Newcom Magic. We did so many AFEs on this. AFE number 43, AFE number 105, AFE number 133, AFE number 150, and so on. You can get a list. And again, you can save this list as a PDF file or an Excel file. The process remains the same for saving, like we looked in our last session. Now I arranged this list according to AFE numbers. So AFE number 1, 2, 3, 4, 5, 6, 7, and so on. It will arrange everything um, in its numerical order. So that is one report that you can run. Now let's see, I saw AFE number 150 Newcom Magic, and I want to see what was my AFE. So I will go to owner or office copy. I will click on AFE. I want to see details for AFE number 150, or I can also select the property that I want to look at. Let's say I want to look at, let's look at Newcom Magic. Um, let's see AFE 150. Okay, you can only search by AFE number and click view. 150 not found. Okay. There you go. That is your AFE number 150. This was all our expenses, how we planned that we will spend $5,000 on contract labor, 8,000 on materials and labor, and so on. The total cost was $75,000. And this is how much each owner needs to pay their share. So our share was $16,000 only, and rest of the money had to come from other owners. Now I want to dive into more detail. I want to see, did I even spend those $75,000? So I will go to AFE comparison. And let's do a comparison for AFE 150. And click on view. Now, our actual planned budget was $75,000, but we ended up spending $97,000. We went $22,000 over budget, and the percentage we spent about 130% of our planned budget. Now, the next thing we can do is we can dive deeper. Like, I definitely want to dive deeper that our downhole equipment was planned for $8,000, but we ended up spending $82,000. So what do you guys think our next step should be? My code is 9172. So let's go to my general ledger for Newcom Magic 1H and see what was that $82,000 bill for. What was it? 9721. And I'm looking for Newcom. That was downhole equipment, right? 9172. And let's do
So it's like each AFE has an account, or is that the way all accounts?
sorry. No, that was the
Like,
account was the category that we spent. We spent on
okay,
repairs downhole equipment, and a
so
sub account is the
just
property ID.
Okay, so the account is still the same thing we see on the LOS, right? All these account codes, what we used to
Yes,
see on the
correct,
LOS. Okay.
correct. So it looks like we paid a lot of money to Moncla workover and drilling operations. Let's see what was this $28,000 invoice was. I'll go to view document. Okay, so this is the invoice and this is the field report on what we did. Now, I'm showing you this process, Hamdella, Yanu, and all of you, because this kind of things will come your way. I'm showing you different, what we are doing in this trainings, we are creating different dots. Those dots are your knowledge centers, and you will connect those dots to tackle the different tasks or projects or problems that come your way. Like this is one problem that just came our way. Now, one thing I can tell clearly after looking at this is that for AFE number 150, whoever did the invoice coding coded my invoices incorrectly. We just saw that it was an invoice for rig work. So Samuel would be able to understand this better. So let's go back to your AFE comparison. So your rig work should have been charged to code 9168, that is pulling unit. Your 9172 is a repair code. So we actually did not spend $82,000 on repair. So whoever coded those invoices coded it incorrectly. But since it was getting billed out to the owners, it's fine. We can show them the actual invoices, but this was incorrect. Any questions so far? And again, the process to save this as an Excel or a PDF file remains the same. I hope you guys remember how to do that. Anything else before we move forward? No, all good?
Yeah.
Okay. So let's look at another type of report. Let's see. So we saw owner office copy, we saw AFE comparison, we saw simple listing. Then we can also create a payment status. We can do an account comparison. Let's say the pulling unit is 9168. So how much do we spend on pulling units in each AFE? Like in AFE number 150, we apparently spent $75,000. In AFE number right, 168, we spent 5,000 and so on. So we can see a comparison. See, like for contract labor, on AFE number 2, we spent $4,000. On AFE number 3, we spent 0, and so on. So we can also see how much money are we spending on um, each cost center across different AFEs. So these are just different types of reports which can come handy when you face different problems when you work here. You can also see a payment status according to different owners. I don't think we keep a track of that in Wolfpack, but the option is there. Uh, yeah, that's pretty much it on this. So another thing. So let's say your budget that you planned for that AFE was $25,000, but you ended up spending $80,000. So what do you do in this case? I took money from Bhavesh, Yanu, Samuel, Hamdella, all of you. So won't you guys get mad at me that you gave me permission only to spend 25,000, but I ended up spending 80,000? Or will you guys be okay? Yeah, it's fine. It's Vikrant. He must have done the right thing. You won't be okay, right? Exactly. So no one's okay. They're like, I gave you permission for 25K and you spent 80Ks. It's not okay. So what happens in such cases? When we hit the $25,000 mark, we have to stop the work no matter what. We have to stop the work right there, right then, because the owner of that property did not give us the permission to spend more than $25,000. And then we have to send out a supplemental AFE and write a letter to the owners that, hey, we spent $25,000, but the work is still not complete, and we think we're going to need another $60,000 to complete the work. And we send it out again. The owners receive it again. They sign the green card, send it to us. They again have 30 days to reply to us that if we should proceed or not, and to pay us their share of $60,000. And then once we hear back from all of them, that's when we continue working. And that is one reason everyone thinks oil and gas industry is so orthodox and slow. Yeah. Any questions so far? All good. Samuel, do you want to add anything?
No, I'm good. I will just have to review the video. So basically, we didn't do much today. Just looking at the concept of AFE, slash call,
Yes.
and equivalent stops. Then we now and
Mhm.
then looked at a sample AFE and how to check it in Wolfpack. So
Correct.
that's not
Yes.
much. Yeah.
Yeah. Cool. So with this last training session, we conclude our 4 Wolfpack accounting training sessions. Um, Now what we can do is we can schedule another session. I believe we have it scheduled for next week, right? Let's see. Let's open our calendar. Okay, next week we have it scheduled for Tuesday. So let's go ahead and cancel that Tuesday session since we already did it today. And let's schedule another session for Monday at around 11 a.m. And in that session will be on DocView, and Bhavesh will be leading
Are you
that
talking
training.
about 11 a.m. your time?
No, 11 a.m. Houston time,
Okay,
11
Eastern
a.m.
time.
CST. So
That's
it will
about
be right after the operations meeting.
3:34. Okay, okay.
Yeah.
All right. No, I
And
might not be able to make that Monday's meeting. You know,
that's
sometimes
fine.
on Monday I stay on the meeting till 12 my time.
Yeah, that's fine. This will be mainly for Himdela and Yani. So you already know how
Okay.
to use
Just
DocView.
help me with okay, W. Okay, okay, okay.
Yeah.
Still record it. It's good to record all these videos that
Yeah,
if you post it
we'll
online,
be recording it. Yeah,
saves the stress.
right. So in next Monday's meeting, Bhavesh will host the training and he will show us how to use DocView. So Bhavesh, you can pull out all those PowerPoint presentations that we had. You can go through the email and prepare for the training session and give us a good training. Okay. So yeah, that's it. That will be our next session. So someone please, Hamdella, please help send out the email. Cancel the Tuesday meeting, schedule another one for Monday, 11 a.m. CST, and send out an email and let copy everyone that was originally included, that we have concluded the 4 training parts, and the next part will be on DocView. All right, that's pretty much it, guys. Anything else? All right, then, all the best. Take care. I'll see you guys later. Bhavesh, please upload the videos.
Okay, I will.
Um,
Thank you. Bye.
Thank you. All right, bye. Take care.